Spot Bitcoin ETFs have just been approved by the SEC. Now, why is this such a huge deal? Well, there are quite a number of factors that go into this, and let's dive right into that. The first thing that I want to talk about is the fact that this puts a lot of legitimacy on Bitcoin. A huge risk factor to Bitcoin is the inherent risk that it isn't proven. There's a lot of question marks around it. Where did it come from? Who manages it? All these sort of things. Now there's one less factor to worry about, and the fact that it is now an institutional asset. Lots of huge corporations and funds are now believing in this as a long-term solution, so that has value in itself. There's no denying that. Now, of course, there is the side from cryptocurrency users that do want decentralization, which is what Bitcoin inherently is. However, there is value to the fact that it has a little bit of backing now. You can't go wrong there. Of course, there's a fine line, but that is very important. The next thing I want to talk about is the fact that Bitcoin futures were a thing, and now we have the Spot Bitcoin ETFs. So what's the difference between the two? The futures were essentially a way to purchase the idea of Bitcoin. This is the idea that if Bitcoin does well, it's going to go up, but it's not exactly tied to Bitcoin itself. It isn't Bitcoin. Whereas a Spot Bitcoin ETF is Bitcoin. The funds that are managing these assets have to have the Bitcoin to back the fund in the first place, and it is secured by all sorts of regulatory transactions. All these things are confirmed now. So it has to exist as it is. There are no games to play around it. If you're buying a Spot Bitcoin ETF, you are buying Bitcoin. You don't have direct access to it like if you were to have purchased it off a cryptocurrency exchange yourself and transfer it to your own wallet. But in many ways, that can be a good thing. You don't have to go through all those steps. You don't have to worry about the self-custody of holding that Bitcoin, which can be very confusing to a lot of people and very stressful as well. But now, with the Spot Bitcoin ETFs, you don't actually have to purchase and hold the Bitcoin to actually purchase and hold Bitcoin, if that makes sense. So someone else is doing it for you. Reputable institutions with tons of security measures are able to do this, and you're able to invest in the Bitcoin. So that is a big win. Of course, a lot of people will tell you that you want to have your own keys to the Bitcoin. That means your own basically passphrase that only you has to be able to access the Bitcoin. I, of course, understand that, but for a lot of people, it's just a little bit too much. The security risks are a little bit too large, so to have this option is huge. Now, the next thing that I want to talk about, and I think this is the biggest factor, is the fact that you can now own Bitcoin in your retirement investment accounts. I do want to thank the sponsor of today's video, which is Dossier. Dossier reproduces classic high-end luxury scents at a fraction of the price, keeping the exact same high quality by cutting out all the expenses and the brand tax. Any scent is $39 or less, while designer scents range from $50 up to $280 in retail. This ambery mint is actually inspired by Versace, and I can tell you it is one of the best scents I've tried so far. There are free exchanges and returns forever. Dossier has a welcome offer with up to 20% off the website. However, you can get up to 30% off your first order by using the discount link in the description of my video. Dossier has a new payment method that lets you earn store credit. Select cash at the last step of the checkout and you can earn yourself a $10 bonus credit and even get rewarded with 10% store credit on every order after that. Now, these have tons of tax advantages to be able to do so, and this is where it really gets pretty crazy. So say you are a firm believer in Bitcoin, you think the price is going to go up, potentially even skyrocket as the years and decades go by, well, you would be paying a substantial amount of tax at the end once you take those profits. Let's say you buy a Bitcoin at $25,000 to make it easy. Of course, it's higher than that at this moment, but you sell it for $1 million in 20 years, right? So you're going to be paying taxes on gains of $975,000. That's going to be a huge chunk. Even long-term capital gains, if you're talking about 15%, that's still going to be well over $100,000 worth of taxes. That is a huge amount. And while a 401k, you're still going to be doing the same thing. That's pre-tax dollars, so there's still an advantage to invest in something like that as well. But I want to talk about a Roth IRA in this instance. If you're purchasing, say, FBTC, which is Fidelity's Bitcoin ETF, in your Roth IRA, and let's again say that the price was $25,000, if it gets to $1 million now, you're not paying taxes on those gains. The $1 million or the $975,000 worth of gains that you've had are not going to be taxed at all, so you're not going to be losing $100,000+ to taxes. You are just good to go because it was in your Roth IRA. You can't do that with Bitcoin itself on the side. You can do that in an investment vehicle for retirement accounts, such as a Roth IRA. So that's absolutely huge that this opportunity now exists to be able to put it into your investment portfolio and have it average out with everything else you already have going on in there. It's honestly a complete game changer. It's going to bring so many more people into the world of investments with Bitcoin and really set the scale for where this thing can go in the long run. So let's talk a little bit more in detail about how these ETFs work. As I already mentioned, when the funds are managing this, they have to have Bitcoin backing the ETF itself. So that means Bitcoin is being purchased and being sold with regards to people buying the ETF. So that's huge. That's of course going to impact the price of Bitcoin. The more investors there are, the more demand. Therefore, the price will likely go up. That's basic economics. So with that being said, we do have to mention the fact that these funds will be making money still. We do have to talk about that, and that will often come in the form of a fee. A lot of ETFs do have a fee for the funds that manage them. In this case, a lot of them are 0.25%. That's kind of something that has been floating around now that the Spot Bitcoin ETFs are approved. So that means each year you're going to pay a 0.25% fee to basically have this ability. And honestly, that makes sense. There's nothing too crazy there. Now, there are a few different ones out there. For example, the Grayscale ETF is over 1% at the time of recording this. That's the fee. So that's something you might want to stay away from. Of course, you just want to do your own research, find which one makes sense for you. But there are different fees involved. But that's very normal. That's not something you can get around. And for this opportunity, it's something that completely makes sense. Now, of course, one thing that I already mentioned is the reliability and the backing that this now has, and the insurance policy that you essentially get when you're purchasing an ETF instead of the cryptocurrency itself. For instance, if you lose your keys, you lose your Bitcoin when you're doing it yourself, you're holding it yourself, you're purchasing it yourself, you're transferring it yourself. If you lose it, that's game over. You're done. Everything's gone, to be honest with you. However, with an ETF, these things are insured. If something happens, if your account gets lost, you still have access to that ETF, to what you've purchased, because it's all recorded, it's all documented, and the funds are yours under your name. The Bitcoin, on the other hand, as its own, if it's under your custody, that's not the same case. You're done for there. There's an issue. Even if one of these companies goes under, for example, Fidelity somehow doesn't have money to continue, they must shut down their business, the shares still exist. That's still your money at the end of the day, and you're covered. So there's a lot of opportunity here. There's a lot of mainstream adoption going on, which is why the Bitcoin ETF, the Spot Bitcoin ETF, is such huge news. It really just adds to the legitimacy of Bitcoin as a whole. And that's a great thing for all cryptocurrencies at the end of the day. If you do have any questions, let me know in the comments. I'd be happy to try and answer them. But of course, you can subscribe to the channel for more tech, business, and money news. Thank you so much for watching.